Marvell dropped 0.9%. Lab scores at 80 out of 100. Strong buy. The 800 gigabit Ethernet SmartNIC delivers the bandwidth AWS needs for its next-gen refresh. An 80-point lab score reflects the NIC's near-term revenue upside. Stay tuned as we break down the silicon, yield, and pricing that make this NIC a game-changer. 3 AI infrastructure stocks dropped 8.2%. Marvell's hardware position remains a dominant strength with 1.6 terabytes per second bandwidth capabilities. While Broadcom leads the custom ASIC, application-specific integrated circuit designed for a singular task market, Marvell is closing the gap using 3 nanometers process nodes. The physical size of transistor features, where smaller, means higher efficiency. Their Teralynx switch architecture competes against Broadcom's Tomahawk 5, but Marvell's focus on electro-optics gives them a physical edge in power per bit efficiency. As hyperscalers move toward 1.6T interconnects, Marvell's ability to integrate high-speed SerDes, serializer/deserializer interfaces that move data between chips into custom silicon is their primary moat. The engineering reality is that Marvell is pivoting to high-margin AI compute, and institutional conviction is visible in the 28.9% surge in 5-day trading volume. While the market fixates on a minor 0.9% EPS, earnings per share, miss, we are tracking the ramp of CoWoS, chip-on-wafer-on-substrate, the advanced packaging technology used to stack logic and memory. This packaging is the physical bottleneck for their HBM2E, High-Bandwidth Memory version 2 Extended, SmartNICs. At $307.86, the stock is holding above its MA20, the 20-day moving average of $263.46. This technical strength reflects the market's realization that Marvell is no longer a telecom company. It is the physical fabric of the AI data center. Quarterly financials showing modest revenue momentum for Marvell. This 8.2% sector sweep across AI infrastructure is a temporary rotation. By Q4 2026, the normalizing yield spread, the difference between long-term and short-term interest rates, will drive multiple expansion as Marvell's revenue growth, currently at 27.6%, accelerates. With the Fed rate at 3.63% and CPI, Consumer Price Index, a measure of inflation, at 0.6%, the macro friction for R&D heavy semiconductor firms is evaporating. The lab sees the looming recession risk as a negligible hurdle compared to the massive capital rotation into AI infrastructure. While the broader market stumbles over tariff uncertainty, Marvell is benefiting from CHIPS Act, the 2022 law providing $52 billion in subsidies for U.S. semiconductor manufacturing, funding for its Austin expansion. This domestic pivot mitigates the risk of a 4.46% 10-year yield tightening the cost of capital. Geopolitically, the board is shifting as new export controls on 400G Ethernet ASICs, custom chips for networking, require licenses for Chinese shipments, creating a 10Q risk factor Wall Street ignores. However, the plus 30.1% YOY revenue surge from TSMC, Taiwan's semiconductor manufacturing company, the world's largest foundry, confirms that the global AI accelerator cycle is still in a vertical climb. Marvell's beta of 2.28, a measure of volatility where 1.0 matches the market, means it will capture double the upside of any sector-wide recovery. Despite the extreme fear sentiment in the broader market, Marvell's S&P 500 inclusion is forcing institutional buyers to ignore the noise. The lab views the current trade war rhetoric as a temporary distraction from the structural reality. AI infrastructure is the only sector with guaranteed demand through 2027. Marvell reported earnings per share of $0.80, missing the Wall Street estimate of $0.81 by 0.9%, a miss that raises questions about near-term guidance. Marvell, custom ASIC networking, is trending higher at 307. Marvell's management is selling one phrase: multi-year AI infrastructure cycle. They repeat it in every prepared statement, on every earnings slide, and in every analyst Q&A. That phrase is designed to make investors feel like the growth is inevitable, predictable, and locked in for years. What it's designed to make them not think about. Execution risk. Because multi-year cycles don't guarantee multi-year revenue, just multi-year R&D spend. Now flip the table. Insiders net sold 262,560 shares in the last 90 days, including the CFO dumping $65 million after NVIDIA CEO called Marvell the next trillion-dollar stock. That's not confidence. That's cashing out while the narrative is still hot. EPS missed by a full penny, breaking a four-quarter beat streak. And while analysts keep raising price targets, KeyBank just hiked theirs to $385. ARK trimmed its position. The bid is thinning, even as the cheerleading gets louder. R&D is up 6.4% YOY, now eating 25.3% of revenue. That's not efficiency. That's a bet-the-company wager on custom AI chips. But here's the gap. Management's 20% growth guidance for next year is framed as conservative, yet they won't commit to a straight-line ramp. Instead, they warn of lumpy execution, especially in the second half. That's not a cycle. That's a hope. The earnings call was all about record demand, normalizing inventory, and customer visibility. Those aren't synonyms. The momentum breakdown for Marvell. RSI sits at 63, pointing to bullish momentum with buyers in control. MACD is currently bullish, with the histogram crossing above zero. Marvell's bull case rests on its 800G Ethernet SmartNIC, a high-speed network interface card, which is poised to capture the AWS data center refresh. By utilizing 7nm EUV, extreme ultraviolet lithography, the process of using short wavelength light to etch dense circuits, Marvell has secured a thermal efficiency lead that rivals cannot easily replicate. But here's what breaks the bull thesis. New export controls on 7nm AI accelerators could halt shipments to Chinese cloud providers, potentially cutting quarterly earnings by 8%. While KeyBank raised their price target to $385, the fact that Fidelity's Blue Chip Growth Fund trimmed their holding by 37% suggests the current trailing P/E, price-to-earnings ratio, of 105.4x is testing institutional patience. The pro-level question is, can Marvell sustain gross margins while transitioning to expensive CoWoS, chip-on-wafer-on-substrate, packaging? The lab says yes, because the 12% projected revenue lift from 800G designs will absorb the higher cost of heterogeneous integration. We issued a strong buy at $266.88, and the stock has since climbed 15.4%, confirming our technical analysis. If Marvell secures the Amazon 800G design win by Q3, we expect a rally toward $350 based on 12% YOY revenue growth. If export controls expand further, expect a retreat to support at $196.33. The lab's call. The AI score of 80 out of 100 reflects high conviction that the 800G cycle outweighs the regulatory drag. Here's the macro picture shaping Marvell. The U.S. export control rules on advanced networking chips now require Marvell's 400Gbps Ethernet ASICs for Dell and Meta to obtain licenses before shipping to China, adding lead time and compliance cost. Meanwhile, CHIPS Act funding supports Marvell's new 28nm Fab 12 expansion in Austin, while rising tariffs on Chinese origin components and Taiwan Strait tension threaten its supply of TSMC-fabricated HBM-compatible PHYs. The surge in AI inference workloads is driving demand for high-bandwidth, low-latency processors, and Marvell's Octeon Fusion AI and ThunderX 3 CPUs, built on 7nm EUV, are positioned as the core compute engines for hyperscale clouds. To meet the bandwidth gap, the company is rolling out CoWoS-based HBM2E packages for its SmartNICs, a move that aligns with the industry's shift toward heterogeneous integration and is expected to expand into 2025-26 data center refresh cycles. The single biggest upside is the scheduled Q3 launch of the 800Gbps Ethernet SmartNIC, which, if it secures design wins with Amazon Web Services, could lift revenue by 12% YOY and push the stock toward a 15% rally. The greatest downside risk is a possible U.S. export control expansion to 7nm AI accelerators, which would halt Marvell's shipments to major Chinese AI cloud customers and could cut quarterly earnings by roughly 8%. Marvell's 5nm custom AI dies just hit 90% yield. No one else in networking silicon is there yet. That's the only number you need to know. Bulls or bears winning MRVL? Comment your prediction. This isn't financial advice. We're engineers, not brokers. Markets move fast, data gets stale, and past performance never guarantees future results. Always run your own numbers before pulling the trigger. Subscribe so you catch the next yield curve before Wall Street does. If you want our full breakdown on Intel, the link is in the description. The lab's out. Go build conviction.